Welcome to the Seatrade Maritime Podcast. In the first of our bonus episodes for the half-year markets outlook, we are joined by Adam Kent from Maritime Strategies International with a macroeconomic overview of the shipping market. Perhaps if you could just start by setting the scene for our listeners.
Yes, of course. If we just sort of start off at the sort of macroeconomic level, I think what we've seen is clear evidence this year, during the first half of the year, that the economic growth has accelerated, which is obviously a positive sign. And we do expect this positive growth to continue. I would caveat that isn't guaranteed, however. I think during the first half of the year, we did see some positive momentum with PMI data, both manufacturing and services. And that's the first time we've seen both of those metrics in positive territory since mid-2022, though some of the recent PMI data has been a little bit weaker. So while we expect overall positive period of growth, we do see the US potentially slowing, and it will be a bumpy ride. I think China's economy has performed somewhat more strongly so far in 2024 than we admittedly had anticipated 6 months ago, though of course we are comparing this year to 2023, which was generally a poor year. Construction remains weak overall across all the retail and domestic construction in China. We remain cautious again with the Chinese outlook, and especially more on a structural basis. We've also seen the ramping up of US trade tensions with China, and of course that could further escalate depending on the US election later this year. From a shipping-centric perspective, seaborne cargo, we expect to grow by around 2% this year, with all sectors contributing to that growth. And it's been the first year for the last 4 years that we've actually seen all sectors posting positive seaborne cargo growth. And on the supply side, I would say that generally for a lot of shipping, the supply side remains conducive to market balances. And given the order books is now at the shipyards is now stretching out 3 or 4 years, certainly for tankers and bulkers, that order book and the supply side picture remains positive for some years to come. But of course, it's the events that we're seeing around the world that are shaping a lot of the shipping markets and sort of helping drive the markets on to levels where we would struggle to anticipate this time 6 months ago. The Red Sea crisis is, of course, the one that's front and center of most of the way that the industry is looking at increasing ton miles versus 6 months ago. Though it must be said that how the Red Sea and the diversions around the Cape of Good Hope impact individual shipping markets is very much based on the sector, the subsector, and the owners. So it's not the case that every shipping sector is avoiding the Suez Canal. And we'll probably hear a little bit more about that during the rest of the podcast when we drill down into the individual sectors. So versus a year ago, we've seen some really strong, significant movements, both on earnings, both on second-hand values, with across all of shipping, apart from LNG. And earnings now for some sectors of shipping are the highest they've been for the last 15 years. So shipping generally across the board is doing well as we approach the second half of 2024.
Great. Thank you, Adam, for setting the scene there. There's a lot to drill down in with that, and that's quite an interesting number you said there. Shipping market's doing sort of best in 15 years. If you've enjoyed this episode of the Seatrade Maritime Podcast, make sure to subscribe on the app of your choice, and we look forward to joining you on the next episode.